All right, stock market analysis. We're going to look at the intermediate analysis of the S&P 500. We're going to look at the SPY as the market has moved up in time and price into the zone that we expected. It was just a really, really good analysis after we were so bearish and saw that decline coming through all last year. And each of those upside bounces hit our targets and then failed and then began to move to the downside. So it's been an unbelievable year for our analysis on the stock market. And now we're moving into this period of risk just ahead. So what we anticipate is that the market will get choppy in here, and then eventually within some days or a couple weeks, the sellers will begin to come in as we enter into this period of risk. So let's take a look as we look here at SPY on the weekly chart. And for those of you that are brand new, this is cycle analysis where we have the cycle brackets on the bottom that show us the energies in the market or the heartbeat of the market. And there are three cycles in here that are illustrated, three different types of energies in there. This is the most dominant holders in the market. This is kind of an intermediate holder in the market. These are the shorter term holders in the market. You can see if you trace out this minor cycle right in here, how the low is right here and here and here and here, all almost perfect, just amazing. This higher bottom right in here that you can see set it up for a test of these highs, and we suppose it could still take out those highs. Now you'll notice in here that there are two projections, basically an upside track and a kind of a middle track in there. And this is the middle track. If it's going to fail in this area we had talked about between 403 and 406 right here, that was the area that was our target. Actually, there was one other one around 401 that we thought it might stop at, but this one now looks like an important area. This over here, the higher track, this would be if in the next 1 to 2 weeks it extended the rally. Now, if it did that, then the next spot up there is about 414 or 4140 on the SPX, the S&P 500. That is the area of the major 50. That would be a 50% retracement and slightly above where it got here in the December peaks right over there. So you see it's had all of this upside movement right over here in this rising phase, and then it really has not made it back up to this level. And that's somewhat typical, and it's running out of time. Now, what does that mean? That means that this period of risk, which begins late January through early April, and for those of you that are looking at this on YouTube and don't watch us all of the time, you might have expected that by early January, the market would be moving down sharply. That's not what this means, or by late January. What this means is that it opens up a window of risk in here that lasts between January and early April. It could turn down at any point in here or accelerate to the downside. Now, the upper track right in here shows what would be a very bullish case. That would be stopping at somewhere 386 down to around 379 and then begin to move up again. This would mean that the bear market ended over here in October if that happened. Now, again, this is the period of risk, and it could come down and test the lows way down over here at 350. The probabilities of this move down over here have been decreasing. The probabilities of it only testing support and then moving up again and then getting back to these levels of 414 or even up to our target for the year at 430, that's right. If you caught our year-end show, our target for the year is around 430 or 4,300 in the S&P 500. This is just the period of risk right over here. And what I said at the beginning of the show is that this period is likely to give you the buying opportunity for the year. That would be also in many commodities and probably gold and silver, because once this would start to liquidate, then they would all liquidate. Money would just come flying out of everything, and that would probably be the best buying opportunity of the year. That's basically what we expect. Again, the period of risk is just starting. That doesn't mean it goes straight down. When you have this much strength and you see this upward turn right over there in the reversal scout, that tells you that there is good momentum going on in the market. And for those of you that are beta testing our market condition monitor, you can see the strength as it shows up in these indexes. And thank you for all of you that are out there testing that. It's going to be an amazing tool, and I just want you to get queued up for subscribing to that because it will be a huge help to your trading and investing. Right over here now, again, we're opening up the window for this to peak. It could chop around in here for a while before the sellers then begin to come in again. So don't be surprised, because remember, February and March are the period of risk, and even into early April. You see this right over here, these two vertical lines are the timing range for the low to come in. So it's as early as late February and as late as April. You could get a sharp decline in here and it end faster, or decline into the support and it end faster. So we don't know how that's going to shape up. We do know that the highest probability is it's a period of risk. Let's look at other periods of risk in here and see how they shaped up. That is when these cycles go into corrective phases. So you had two of them coming down right over here, and you had the big break off the top. You had two of them coming down here. That was the more dominant one, and you had this big failure from the sell zone right in there. Here you had again the minor and the intermediate, that big sell right in here. So when you look at the distance of the declines, this one was from roughly 480 down to 410. That was about 70 points. This one over here from the sell zone was about 417 down to about 361. So that was 56 points right there. This one here was after a very big attempted rebound from 431 all the way down here to 350. So that was 81 points on the S&P 500. So it's 57 to 81 points. Here you could see if we peak in here and you just have a somewhat average decline, let's just say 60 points. If it's from 406, then that would take you down to into the 350s right over there. And if it only got into support, that would be a very mild decline right there. But still, the timing is right for it, as you can see. You see where all three of them were coming down right over here as the market was super bullish. You even got a decline there from 454 down to 424. So that was a 30-point decline in the SPY. If you take a 30-point decline from here, if it's a very bullish condition, you're going to get down to about 476. 476 is basically right where we have it projected right over here. That's only a 30-point decline, or 300 points in the S&P 500, setting up one of the best buying opportunities I think we'll have. Question is, did the bear market end here, or is it going to end here with a test? In either case, those will likely be the buying opportunities. That's a look at the intermediate patterns in here, and you can see the probabilities are very high for this market to peak and chop around a little bit in here and then get into a period where the risk is much higher to the downside. That's it for our look at the stock market today. I hope that was fantastic for you. Please do take advantage of our level 2 membership. This ends on Sunday. Only 3 more days here on Friday. $29.50 for all of this amazing information. Just click the Learn More button at the top of askSlim.com and you'll learn more. You'll be able to see everything that we're offering to you here for just $29.50. You can watch all of my evergreen videos of everything I taught in here. There's like 300 of them during that period, $29.50. I mean, I have decades of learning that I'm willing to share with you. $29.50. Sign up for that right now. Don't miss this opportunity.